Hello again, everyone. It is Wes back with Pikes Peak Trades and a third video this weekend. There was just so much to look at and really important decisions to consider about did we set an intermediate term low on Thursday or Friday versus are we expecting another set of bearish legs? So I wanted to deepen my look by taking a view at many other individual names just to kind of broaden here what we're looking at. And so I'm going to take you through a lot of other charts. I'm excluding any name that did not close Friday above its 200-day SMA. So that excludes things like Home Depot, Salesforce, and Walmart. That doesn't mean that I won't be charting them again going forward. It just means that they've actually got to show that they can get above those significant moving averages until I give you a chart update. But before that, I want to begin because we're with the S&P. These are the E-mini futures. A live look here at futures as I'm looking, this would be at about what maybe would that be about 10 p.m. Eastern time on Sunday. And so this is what I'm looking at, and I'm seeing that we are beginning to trace out a 5-wave impulse. So you see the wave 1, the wave 2, the wave 3. I think it's working right now on the wave 4. As long as we don't get a collapse and this price gets traded into before market open, I think we're seeing futures begin to trace out the beginnings of the impulsive move that I think would eventually culminate in a minute one, probably somewhere within resistance levels, maybe right around 3,900. Okay, now what would that mean for the S&P? Well, the S&P is still working on proving that it can put in a 5-wave impulse, 1, 2, 3. Maybe we do see a wave 4, some weakness with the punch up, and it's really this second low is the one that I want to try to catch for some entry as it moves up. And if you follow on Twitter, Oliver Kell, who was the 2020 U.S. investing competition champion, he's talked about his technical chart setups. That's not Elliott wave based, but it makes so much sense in the context of Elliott wave that what just happened was what he called a reversal extension. So a pretty big sell-off in. And what we're doing now is we're trying to build a little bit of a base. And are we being able to form kind of the left side of this base? And then we move down to form the right side. And then he calls it a wedge pop. So we would be forming this minute 2 and we're popping above that wedge, and that would be the Elliott wave 3. So what I want to encourage you in thinking about is you don't need to try to catch the bottoms, because think about how far we've fallen. We've fallen so far. There are some growth names, a couple of which that you'll see in this video, that have fallen 30 to 50%. So considering how far we've fallen, isn't it going to be worth your while to try to wait for some confirmation? And that's what I'm going to be trying to patiently wait for this week. So I had also said on Twitter, I'm 85% cash going in. I have a few select names that I'm holding, 85% cash, and I want to try to catch a bottom here to try to get a move of a third degree. And that's what I'm looking for. Okay, so that's just a little bit of just interesting information. Here looking at futures, looking at the S&P, it's possible that between now and market open, which we're almost 12 hours away as I'm recording it, we could get a triangle that could just kind of draw this out before we get that pop up. And you know, that's speculation. But again, as long as on futures, here on the minis, 37.7650 holds, we're looking at the potential of a 1, 2, 3, 4 into a 5. And that's what we want to see. We want to see an impulsive move off of this low. Okay, so now to get into a lot of really, I think, important and timely updates on individual names, we've got to look, I think, to a resumption of leadership from tech and semiconductors. And we're going to begin with AMD. And I think AMD has just put in a pretty compelling double bottom off of just a classic simple zigzag pattern right at a typical fib. It bounced off of our 50-week SMA, and I think that's a significant potential place to bottom, with potential a channel that bottomed right at the closing body of that candle, and then a confluence of both fibs and rails. I think we could see a run up to maybe 117 to 120 by summer. So because of the depth of the sell-off, I'm extending that target outward. You're going to see the details of that here. It was extremely hard to count AMD essentially from December all the way through now, and that's because it just put in just a 2-month correction. And I think I'd mistakenly called that a simple zigzag. Looking at it on the daily, this definitely traces better into a double zigzag. So just as a reminder for you, when you're looking at corrective moves, you want to look for a 7-wave move. So 1, 2, 3, 4, 5, 6, 7. That is the pattern of a double zigzag. And I think that's exactly what we just saw on AMD. Just pushed itself up at the close to finish above its 200-day SMA. And now we've just got to see it battle back through this potential bull flag. But again, take note. Let me delete that. That's no longer valid. Delete this. That's no longer valid. Well, there is still a ton of room to run. So wait for a confirming second pullback, a double bottom that holds. That could be your entry for long stock. Certainly want to be patient, I think, to play anything options related. Okay, let's stay within the tech frame and look at Palantir. And so this is one that had been punished almost 50% off of its highs. And I do think that we potentially see here another double zigzag. So 1, 2, 3, 4, 5, 6, 7. Now, what's a little bit suspect about this count is the Y leg related to the W leg is only about a 50% fib. And we typically look for that to be 62% or greater. It doesn't mean it's invalid. It just does mean that it's possible that a name like Palantir needs maybe another touch of this lower rail. And I've got that down here just in case that actually happens. You can also you can look at Chandler Trades, another really, really good waiver out there. He's got a slightly different version of the double zigzag that would allow for kind of a internal third wave extension if markets decide that they need to sell off. Did we see possibly capitulation volume? Certainly elevated volume on the selling. Now, bears would also say that's what you'd want to see in a bear market, and I can't argue against that. If we have set the bottom, I think a name like Palantir could be in for an explosive move. And if I drill you into here the details of the 15-minute, you're going to see what I'm counting here. So we have an ABC down, and we have an ABC up, and we have an ABC down, and we finished the C leg with 1, 2, 3, 4, 5. So that gives me a little bit of optimism. Now, in a lot of these names, you're also going to see we have to get out of these descending bear channels. So would we see a 1-2 move and we look to break out in 3? That's kind of what I'm looking towards. That would be the confirming move. So as I mentioned, I'm not as interested in buying bottoms. I really would like here to kind of buy the breakouts. Again, that's what Mr. Kell says is that wedge pop. So this would be within a wave 3, a confirming break, back test, and move up would be what I would look to enter. Okay, again, patience on this. So staying with tech, another semiconductor. I think that Nvidia just put in an expanded flat. So 1, 2, 3, 1, 2, 3, all the way down into a 5 wave right here at what would be a typical fib in between the 24 and the 38% fibs. And I think it still has maintained its original target. So an alteration of the internals, but not changing the original target. I think if we see the rally, I think growth, tech, and semiconductors are going to get back out in front. And you can now see that drilled into the 15-minute chart. So from what I'm counting here as the B wave of that expanded flat, this counts beautifully. 1, 2, 3, 4 with an extended fifth. 1, 2, 3, 4, 5 down to that bottom. Okay, and again, would we be looking for a 1, 2 with sub-degrees of the 3 that need to get out of the channel and above that 200 period MA? That's what we need to see. Now, of course, the bear count would be that, well, we're just tracing 1, 2, 1, 2, 3, 4, 5. That's a 3, but we've got a 4 and then another flush yet to come. You're going to see that I've got to include those bear counts as possibilities. Okay, so continuing to stay with tech and growth, we have C Limited, SE. I actually didn't have to alter this count significantly at all. I do think we are in the final leg of a significant top, but internally, I see it as a minor pullback. 1, 2, 3, 4. Yeah, it pulled back and it was painful, but I don't think it changed the degree. Now, of course, we have to leave the possibility that this is actually, a bear market top. That has yet to be resolved, but we saw a bounce right off the 21-week EMA. I dig you here into the daily. I think internally it counts beautifully as a simple zigzag. So 1, 2, 3, 4, 5 down to A, 3 up to B, 1, 2, 3, 4, 5 for like C of minor 4. And I think we see evidence on a lot of charts. We've got compelling lows in place. Now, what I also like about SE is that guideline of alteration between 2 and 4. We don't call it a rule. It is not a rule. It does not have to be in place. But we see here, we see an expanded flat. And it actually was kind of shallow by fib, only a 38%, into a sharp zigzag that almost got to a 62% fib. I like that alteration. And I think we're going to see up into summer. I think we can see SE above $300. Okay, so staying kind of with the tech growth theme, we look at Snap. And I think that Snap put in here a primary 4. I think it was very quick. Now, that definitely alternates against the long, drawn-out primary 2. But, we've seen basically everything accelerate as far as price goes. So I think an accelerated primary 4 is not out of the question here. Again, it bounced off the 21-week EMA. It's held this channel. We get into the daily here. We see overthrow of this lower rail. But look at that amazing bullish candle right back above the 50-day. And internally, this also traces well as a simple zigzag. 1, 2, 3, 4, 5 into A. 3 up to B, and then we have 1, 2, 3, 4, 5 down, where this C leg is a nice extension. Okay, now let's talk a little bit about identifying potential of bear extensions for a bear market move versus corrections. If this C leg of primary 4 goes beyond the 1.618 fib, then we're actually thinking that we've got a third wave extension of a bear move, where this would be 1, 2, 3 extending downwards. And that would be my sign, my indicator on a name like Snap. It would also actually be present on Apple and Tesla that I've already talked about in the previous video. That would be our clue that we actually are actually moving probably into a bear market. Okay, again, I want to show the 15-minute because it's these descending channels, these bear channels are the ones that we're going to have to break here. Ultimately, we got to see a name like Snap above 69, above that B. We need to see it start to move aggressively up and out of the channel. What I want to point out to you again is you don't have to be early. Wait for the confirming move because look at how much higher I think it can go. I think it can go to $100. And I think it can do it by the summer. That's a huge rotational move back into tech and growth, but that's actually what I think is possible for us to see here. So we don't need to be early. What we need is confirmation. Okay, I want to show you a second tab of names. Okay, so what if the volatility of growth is just not your style? Other than pins on this tab, I want to talk about a really solid Dow component that barely corrected this whole time, and that's Honeywell. So Honeywell, I think, has just put in already a 1-2, and it's of a minute degree. It didn't even touch this gap area after its November earnings. And if you want a solid dividend play, something that is not volatile, if we get a break out of this declining trend line, this would be that wedge pop. So here is all the basing. It's already in place. We move up. Why not add something like Honeywell to your long stock portfolio, or add options expiring in July or August? I want to point out to you, because of what we've seen in industrials and financials and things outside of that, just how strong a name like that would be. And what I just realized was I need to open this up. I absolutely, speaking of financials, I wanted to show you Goldman Sachs. So let me make sure that I can fire this up, get this to load quickly. While that's loading, let me move into Exxon Mobil, because this one is fired up and ready. And so why wouldn't we also consider here, why wouldn't we also be considering names in energy? And I want to point out on Exxon, it had a tremendous start to the month of March. It's already up just this past week, 12%, unreal, above this long-term pivot resistance that has me thinking that we do actually have a cycle low in place. I want to delete that because that's off an old chart. What would confirm that energy has continued to move up on Exxon would be a move above 66.55. If this wave 3, it's a 3 of 3, which explains why it's so bullish. If this wave 3 breaks 66.55, then I think we've got confirmation we are not going to see the potential of a deflationary collapse. That obviously would be the bear count. And these bears out there, they're out there in force, and they're calling for the deflationary collapse. Use a name like Exxon under an Elliott wave invalidation level to not confirm that. Now, if we see obviously a massive reversal in oil, by the way, if I get back to futures here, I show you oil futures, and what are they doing? Oh, well, they're only up over 2%. I just think it's kind of unlikely that we see this happen. We can use a strong name in energy. I mean, certainly been. It's been surprising to me how much it's moved up, but in an inflationary environment, probably not. Okay, so here, let's see Goldman Sachs. And what we need to see is this rail. I really should have opened up two of these at the same time. On the monthly, you're going to see something absolutely significant about the breaking above of that rail. So I think Goldman put in a very shallow, or a 1, 2, 3, 4. It has barely even corrected. Let me get you into that and drag this back, because this is phenomenal. So the trend between a cycle and a super cycle and a cycle top, and it just broke. And the only way that this is going to not work out is if that was simply a bearish fake out and we're going to collapse. And I don't see that happening. I see a name like Goldman just continuing up. This goes along nicely with my thesis that I think we are in still the beginning stages of big moves. And so in a name like Goldman, I think we see a run up. I think it still keeps running up, and I have that running up again into summer within a primary for pullback. If this is wrong, this needs to reverse quickly, and we need to prove that this is a primary top, and it needs to get back underneath this rail and start falling rapidly. Okay, so I just thought amazing breakout in a name like Goldman Sachs, and I don't see financials and big banks collapsing. I just don't. But that's my take right now. We need to see price confirm for the rest of the month. Okay, so I really should have had Pinterest over on the other tab with your growth in tech. I think Pins just put in a primary 4. Was it deep? Was it Painful? It absolutely was. We leave in the possibility that Pinterest actually put in a cycle top. And I probably could have done a better job being a little bit more vocal about using growth names and growth darlings like SE and Snap and Pins to talk about the danger that we did see in the market, the frothiness, the overthrow of some of these trend lines, the negative divergence on the technicals. But we got the resolution. And I think in Pinterest, I think we got the potential of a primary four, tracing out, like you've seen in a lot of names, I think a very classic zigzag. So 1, 2, 3, 4, 5 down, 3 up, another 5 down. Now, obviously, we look towards invalidation. So if it's almost there, if Pins trades above 70.60, we already see a 4 into 1 violation. Now, that's not an invalidation of a potential bear count, but it does shed some doubt on it. Now, like almost all of these names, what do we have to start seeing? We have to start seeing the potential breakout of these bear channels. And again, I'm not worried about being too early. Might I take a couple shots on a potential double bottom? If we see a pullback early this week, it's going to be tempting. But look, if you get in at 75, you've at least confirmed that we're going to break out of this descending channel upwards to what target? I see a target kind of like Snap. It could get back to $100. So again, I like the potential of a lot of compelling bottoms, both from channeling, fib, and MAs. The market's going to have to prove it. I just kind of want to reiterate again, you don't need to be early to these things, especially if you are a swing trader. And even for long-term stockholders, we see the potential for where these project out in the summer, if we get the bull market, is so high. I would just encourage you, be patient. Wait for, as Kel says, wait for the wedge pop, wait for the confirming Elliott Wave 3, and be on your toes this week. So as always, happy to bring these video updates to you, and very, very excited and interested to see where we end up. I think we're going to get some great opportunities to buy maybe mid-week in a lot of these names.